Hello trading friends and welcome back to Forex Focus, brought to you by IG. Taking a look at the US dollar today after the sticky inflation rate data that came out of the US, especially in terms of Japanese yen, because it's a new 30-year high for US dollar, but we'll also measure the appreciation following this hot inflation data in the US relative to euro, Australian dollar, British pound. We'll cover all the bases here, but I do want to start with the dollar-yen market because this is the highest level since 1990 for dollar-yen, ripping through 152. And if you've been watching this market, you've seen it dance around 152 the last couple of weeks. And if you've been watching for the last several years here, you've seen it hit 150 and then reverse, hit 150 again and then reverse. Looking at 150 and a potential reverse again this time, and moving through these highs, like I say, since 1990. And if you go back, you can see all the data here from IG back in the early 90s. You see that this market got up to around 155, 160 range, and then reversed to a huge extent in the years following. Now, of course, this historical price action, no indication of what's to come, but these are some real historic high levels, and we'll see if they can get up to those 155 to 160 prints, or if 153 is that high and we get a little bit of reversal. But yeah, US dollar moving higher across the board, and actually Japanese yen wasn't even the hardest hit of the major forex pairs. We have an Australian dollar is down almost 2% on the day. That's a huge move in forex markets. Euro also lower by well over 100 pips, as well as pound getting hammered down 150 pips, and all of these markets reaching some pretty important levels. And we'll highlight the euro in just a second, but look at those prices there on the board, and you can take a look at IG.com or on the app if you've got it. But I mean, 65 cents in the Aussie, that's really kind of been the low for the last handful of months. There's been some trading below 65, but not for long. It's been bouncing around the 64 to 66 range and was above 66 cents just yesterday. Euro getting close to 107 once again, and like I said, we'll take a closer look at it, but this market hasn't closed below 107 this year, the last several months of trading. And the pound right there around $1.25, that's another level that has been traded towards, close to, has been broken maybe in some intraday trading or for a couple of days, but not really broken far below that over the course of the last few months. These aren't 30-year extremes like the dollar-yen market, but there's some pretty important prices for the last handful of months of trading, and all this US dollar strength coming after a strong inflation number, which of course you might say, what, inflation's high in the US? How could that mean a strong US dollar? But keep in mind that we are in this nuanced scenario right now where higher than expected inflation, which we got by 0.1%, and now an uptick in the headline inflation number, the CPI inflation rate, over the last 2 months, 2 upticks, and now a higher than expected reading, and now back to 3.5% for the first time since September of last year. This is coming at a time where most central banks globally are looking at interest rate cuts, and everybody's wondering when the US will cut interest rates. And if you've traded Forex and watched interest rates before, you know that interest rates drive a lot of demand for currencies. And so a stronger interest rate can usually mean more demand for the currency. And so if inflation is staying high, then the US central bank, the Fed, might not cut rates so soon. And thus, there's been a renewed demand for that US dollar, hence the appreciation that we're seeing coming off of this hot inflation print. To break it down a little bit further, let's look at US interest rates following this sticky inflation that came out here in April. 10-year rates, the yield for 10-year treasuries skyrocketing to new year-to-date highs, new highs since November, got up to 4.4% in the last week or so of trading, and now ripping well beyond 4.5% following the CPI, as you can see, now nearing 4.6%. We'll see if it can get back up. It got really close to 5% last year, and that's multi-year highs for the 10-year yield. And so we'll see if it can get back up there. I mean, if we see strong inflation data, strong employment data continue in the U.S., maybe interest rates haven't peaked. Maybe they will move higher once again. And also looking at the Fed funds futures, which help us project what the Fed, what futures traders think the Fed might do at their coming meetings. Now we see for the June meeting, which a week ago had a greater than 50% chance, a 60% chance of being the first rate cut from the Fed. Now it's less than 20% chance of that first rate cut coming from the Fed in June. Again, strong inflation data, strong U.S. employment data that we've been getting, causing the Fed to potentially hold out on some of these rate cuts that they've been talking about and everybody's been expecting here in 2024. And again, this leads to the U.S. dollar strength that we've been seeing. And I did want to highlight this euro market because as you can see, 107, a really interesting price for the last several months of trading. If you've been trading forex for the last few years here, you'll remember that this euro dollar market did break below parity for a handful of days when inflation was starting to move higher and interest rates were starting to move higher globally, but the U.S. was really leading the way, hence the U.S. dollar strength then. And so this market can move much lower than 107, but right now trading below 107.5, nearing that 107 number that the market hasn't closed below in the last handful of months here. Really interesting trade coming off of this inflation rate. Of course, we'll continue to monitor U.S. data as well as European data and Japanese data. Globally, the trend has been worse and worse data, or you know, it depends on how you look at it. Of course, lower inflation in the euro area by people in the euro area might be deemed as a good thing, but for this euro dollar market, not so much. We'll continue to monitor this data globally, but for the time being, yeah, seeing 30-year highs for this dollar yen market, getting close to some recent highs for the dollar in a handful of pairs. We'll continue to monitor it here at IG.